Hey everyone. So the first and the most fundamental thing I learned is that insurance is for risk cover, not investment. This is a major shift for me as I previously hadn't taken life insurance and had prioritized health insurance around my 30th birthday because of the rising medical inflation. Now, I need to point out here that health insurance is also very important. It is important for someone who's a breadwinner and has dependents. Term life insurance should be the absolute first priority. Now, I would like to stress here that unlike health issues or accidents where you might get a second chance, God will never give you a second chance if death occurs. Now, I need to share here a breathtaking and a heartbreaking real life example of one of the people that I know, known from like friends and acquaintances, that person lost their lives in a motorcycle accident. They were just starting their earning years, and if they had life insurance, that financial support could have helped their parents immensely. Now, this really hit home. Life can be so unpredictable, and you don't know whether you will wake up tomorrow morning. Now, I would strongly advise after against like the conception of mixing investment and insurance. Now, this is a common with plans like endowment, money back, and whole life policies. These plans typically offer a very low return, that's around 5 to 6% compared to the dedicated investment options like mutual funds. My own experience validated this. When I was 24, an agent sold me a 5 lakh endowment plan with a premium of 19,000 per year. Just 1 year later, I bought a pure term plan for 1 crore cover with a premium of only 22,000 per year. For nearly the same premium, I had got 20 times the cover with the term plan. Now, we also looked at the calculation which was showing that if you take a pure term plan which costs less and invest the difference in premium in a mutual fund, you end up significantly better off in the long run. Whether death occurs or not, even if you surrender an old endowment policy like I did, after 7 years, getting only about 82,000 back out of 1,40,000 paid, investing that amount plus the future premiums in a mutual fund can yield much better results than staying in the original policy. Never mixing, and also make sure that you never mix yours and your like parents, spouse, their investment with the insurance. Okay, never mix your investment with insurance is the key. I repeat, never mix your investment with insurance is a very important key. Another point against mixing is the return of premium option, which agents often missell by highlighting that you get your money back if you survive the policy term. However, the premiums for these plans are significantly higher, and not investing them into these kinds of plans where the premiums for these plans are significantly higher. What you can do is you can invest the extra amount elsewhere, say in mutual funds at 12% annual return, which is going to provide a much higher corpus by the end of the term than the premiums returned by the insurance company. I repeat this point, which is extremely vital. Premiums for these plans are significantly higher. I'm talking about the plans which have the option of return of premium. Rather invest that extra amount elsewhere, say in a mutual fund at around 12% annual return, which is going to provide a much higher, larger corpus by the end of the term than the premiums returned by the insurance company. So go for a normal term insurance plan plus mutual funds. That's a better option rather than going for return of premium, buyback, all those different kinds of plans. Never mix your investment with insurance. I repeat. Consider insurance premiums as an expense, like motor insurance that hopefully goes to waste because the event never happens. So, how much term insurance should you take is a main question. I need to look at the human life value using online calculators, which are very much available. A general rule of thumb is to get at least 20 times or ideally 25 to 30 times your annual active income. If you earn 10 lakh a year, you should aim for 2 to 3 crore cover. Now, I would like to emphasize here that companies base this on your active income, like your salary or business income, not passive income from investments. Now, regarding the policy duration, I would like to recommend here that taking cover until your working life ends, typically up to like 60 or perhaps 65 to 70 if you delay marriage and your younger dependents are there. Going for policies until age 80, 90 or 100 is generally not advisable, while the premium is higher for longer terms. Calculations show that investing the difference in premium between a 60 or 70-year policy and a 100-year policy in a mutual fund results in a much larger corpus over time. Even if death occurs between age 70 and 90, the mutual fund corpus often exceeds the sum assured. Stick to regular premium payments for the chosen duration, as the limited pay options like 5 or 10 pay also involve higher premiums that could be better invested elsewhere. It's also critical to never miss a premium payment for your term plan, as reviving a lapsed policy can be difficult or impossible, and the new premium will be based on your older age and current health. Moving on to health insurance, it is important. It cannot be overstated, especially with the skyrocketing cost of medical treatments. My own experience with a 2-day hospital stay of one of my close relatives for a fracture costed around 1.6 lakh rupees, which was a stark reminder. I would also like to share an example of maybe like somebody from one of my acquaintances who had a minor hand surgery. It costed around 5 lakh rupees for over 2 days. Now, medical inflation is much higher than general inflation, potentially reaching 13 to 14 annually. This is the percentage, 13 to 14% annually. Now, alarmingly, the lifestyle diseases are on the rise, leading to conditions like diabetes, high cholesterol, and obesity. And a significant percentage of heart patients are now between 25 and 35 years old. Given these risks, having adequate health cover is also very essential. For health cover, I would really like to suggest that the base policy around 20 to 25 lakhs, especially for a family of 4 in metro cities, is very much important. I would like to explain the concept of family floater plan, which is going to cover the multiple family members under a single sum assured, is also important. If you have a policy which is going on and you have just started a family, you bought that policy when you were single. Now it's the time for renewal of that policy. Just make sure that you add the family members. Maybe now you have got recently married and you're about to renew the policy, or maybe after a few years, few months, make sure that you add your family members, your wife or husband, whosoever. If you also make sure that later on, if you have your children, you make sure that you add them as well. If you have dependents like your family members, your parents, your old aged parents, they don't have a policy, so just make sure that it could be under the very important plan of which allows like something like the family floater plan, which is going to cover the multiple family members under a single sum assured. Now, to increase coverage beyond the base policy, super top-up plans are highly recommended, unlike the top-up plans which cover claims above a deductible per claim. Super top-up plans cover claims above a deductible in aggregate for the entire year. Now, this means if your base policy limit is say 25 lakh, your deductible for the super top-up policy kicks for any expenses beyond that 25 lakh in a year, regardless of how many claims you make. Now, super top-up premiums are relatively low, especially with a higher deductible matching for your policy cover. Also, I would like to make it extremely important here that to get a health insurance early in life and maintain its continuity, please. As you get older or develop health conditions like high blood pressure, diabetes, arthritis, getting new cover or increasingly existing cover becomes much harder and the premiums increase significantly. I would like to share here that there are a lot of women, they develop arthritis, etc. at 40 and after that. So it could be added, it could not be added to a new policy because it's a high risk customer. Okay, so early you get a health insurance plan in place that is going to be phenomenally beneficial for you. Now, critical point I like to emphasize here is the need for the complete honesty and disclosure when you're applying for insurance. Insurance companies often look for the reasons to reject claims, and any discrepancy, whatever is between your application and medical history, can lead to rejection down the line. If you smoke or drink, disclose it. Even if it increases your premiums or leads to rejection, at least you know where you stand. While buying policies online might seem cheaper, the role of good insurance agent or advisor is particularly important for health insurance. They can help you navigate the complexities. Choose a reputable company. Repetition and claim settlement ratio matter more here than your term plans, and crucially assist with the claim process, which can be challenging to handle yourself while dealing with hospitalization. Finally, beyond term plan and health insurance, I would like to mention some important features that you need to consider. First one is critical illness cover. Provide a lump sum amount upon the diagnosis of specific critical illness, helping replace lost income during the treatment and recovery. Number two, personal accident cover, which provides benefits in case of accidental death, permanent disability, or temporary disability. This is highly recommended for those who travel frequently, especially by road. In summary, here are the key takeaways. Buy insurance only for risk cover. Do not mix it with investment. Prioritize getting a term plan, insurance plan, especially if you have dependents. Get it early and do not delay. Ensure that you have an adequate insurance cover considering rising medical costs and lifestyle risks. Get a good base policy and add a super top up. Also, I would like to bring here that always be honest and disclose all your health and lifestyle information in your applications. Consider critical illness and personal accident covers based on your specific risks, and use a trusted advisor, especially for the health insurance, to help you